reiterated that credit growth to the real economy remains strong. The central bank said that the loans and advances by NBFCs clocked growth of 17.9% for the quarter ending June 2018 and 20.1% for the quarter ending September 2018 on a year-on-year basis. The data attempts to counter the claim that restrictions on weak banks and stress in the NBFC sector is hurting flow of the credit to the economy. Listen in to ET Now's consulting editor Mythili Bhusnurmath and PMEAC member Ashima Goyal in this conversation.
Well, one has to take this to the caveat. One, as far as banks are concerned, remember last year there was hardly any credit growth. So this is on a very low base. So it might look as if it's very healthy, but in truth, if you were to discount for the fact that the base effect is there, it is not, anything to write home about. As far as the NBFCs are concerned, because bank credit was so low, growing so slowly, a lot of the demand shifted to NBFCs. But post what we've seen with IRFS, NBFC credit has also really tanked. So overall, I would hesitate to say that all is well as far as credit growth is concerned. I think the data needs to be taken with a big pinch of salt.
I don't think one needs to see it as a response to the government, but the market has been seeing that overall liquidity is tight, and we know that there are certain sectors where credit growth has slowed, that NBFCs were making up for slower credit growth from banks. And overall, credit growth has been slow for a very long time. This year, there is some revival, but it comes over a low base. So it's still not adequate for robust growth in the Indian economy. I think our credit growth needs to improve further. And there are sectors that are adversely affected by the slowdown in NBFC credit growth to certain areas, some NBFCs.